Hello, fellow stock pickers. Hope you guys all have had a good week. This week, I'm going to give you slightly different information. I've had a few people asking me how to start up their portfolio, so I thought I'd give you a bit of guidance on what I would suggest and what I actually did. When I first started, I just picked any stocks that I thought looked good, and I bought a small amount of around, I suppose, between 100 to 500 pounds worth of stocks. I think within the first 1 to 2 months, I had probably accumulated about 30 stocks. I was just too excited to buy them. Some of you may think that that's not a very high number, but the way I want you to think about it is information. You want to be keeping up to date with the information that is coming out about these companies. It will be easier to keep up to date with 5 stocks compared to 25. As you get more adept at stock research and what information to take on board, you can then build up your portfolio slowly and you will find it a lot easier to manage. Another reason is the amount of money you can invest into a smaller number of stocks. For example, spreading £1,000 over 20 stocks means you invest £50 per stock. Using the same £1,000 over 5 stocks gives you £200 per stock. If the stock returns 10% on average, the £50 would give you a £5 return, whereas the £200 investment would give you a £20 return. And this is just as a basic example. Just imagine if you put more in, or if the stock goes up by a higher percentage, you would get a bigger return. Therefore, building a condensed and focused portfolio initially will help you gain quicker results in building your capital. Hopefully, picking the right stocks will help you put more money into each share every time you buy them. Before you buy any stocks, do your research known as due diligence. Learn how to read companies' financial records, known as the company fundamentals. That's like the balance sheet, the profit and loss account, find out how much money they've made, their current cash position, if they've got a lot of cash, or whether they are basing it all on loans from other companies. Learn how to read candlestick charts, which is known as technical analysis. Find out what support lines are, find out what resistant lines are, trend lines, for example. What future plans does the company have? What catalysts could get the share price to increase? That's what you really want. Do they have decent products that are they going to release it in the future to increase their share price? Insider share purchases are really useful information. People will only buy shares if they know something good is coming, and if insiders are buying shares, they know more information than you will. So if they're buying, that's a good indication that you should also buy. Know your entry and exit strategy. What price do you want to buy in at, and what price do you want to sell? You don't want to purchase a stock at a high price and find out that you're left holding shares that don't come back up in price for a long period of time. And finally, your own conviction or your gut instinct. If you feel good about a certain stock, especially after you've researched it and read all about it, and it still sounds good, then that may be a good indicator that this is a good stock to buy. And lastly, I didn't want to go without talking about at least one stock. The one I'm looking forward to seeing on Tuesday is GAXY Next Generation, ticker symbol GAXY. They are releasing their financial reports tomorrow, so hopefully we should see some decent earnings coming out of the last quarter, which in turn should make the share price go up. Hopefully we will see a greater return on this stock position. So that's this week's video. I hope I've given you a good starting position in which to start creating your own portfolio and picking a few decent stocks in order to grow your initial capital. Remember, always do your research, always find out what a company's doing, where they're going to be going in terms of future plans, what products they may be coming out with. Always do your due diligence before you invest your money. If you have any questions, please do leave them in the comment below. And if I can't answer them, then I'm sure somebody else will be able to provide an answer to any of your questions. In the meantime, have a great week and I will catch up with you guys soon.